Hi, and welcome again to another edition of Market Analysis for today, September 22nd. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. Well, markets have been given several wake-up calls this week, the most notable coming from the Federal Reserve. But the latest unemployment data just delivered one that may be just as significant. The surprise decline in weekly job claims to 201,000, the lowest since January, suggests the labor market is still hot. After the Fed's economic projections Wednesday showed interest rates staying higher for longer, the labor data further solidified that concept for investors. The market has been obsessed with when rate cuts will begin and how plentiful they will be in 2024. But that's been abruptly replaced by the realization that policy will remain restrictive for some time. The market reaction has been significant since the Fed's projections showed rates staying above 5% through to 2024. The S&P 500 has fallen to 2.6% over the past two sessions, and two-year Treasury yields have climbed to 17-year highs. It also appears more justified in light of Thursday's jobless claims data. A softening labor market is of paramount importance to the Fed to help its inflation battle. Fed Chairman Jerome Powell said Wednesday a soft landing was not his baseline expectation, although it is what the central bank's economic projections show. It's unclear why Powell was reluctant to say he expects a soft landing, which entails easing inflation without a recession or a sharp rise in unemployment. His issue may be that you can't have a soft landing if the labor market is running hot. So what does that leave? No landing? When it comes to markets, investors have reset their expectations in recent days. It leaves room for softer than expected economic data to rejuvenate the stock market. So would that be the case for next week? So far this week, obviously looking at the market fluctuation, here's the Nasdaq, a daily chart. We see it today that we are in a recovery mode or a pullback mode, if you will. So 15,000 will be the initial psychological resistance internally. So let's see if that will be happening. But we haven't, seen that the markets are perhaps will do a correction, a pullback, and then continue the previous trend. So expect another leg down perhaps today. The same token goes for the S&P. So 4,400 will be that internal resistance for it. And as far as for the Dow, 34,500 most will probably be that level. I've had we were speaking about crude oil, $95 early in the week. I have two positions in crude oil right now open. I'm positive 14 bucks and negative 22 in another one. But I'm still bullish of seeing crude oil at 95 sometime soon. So perhaps it'll be next week. I will see that crude oil at 95. Nat Gas is trending higher, so 270 is gonna be that initial. I have my resistance at 280. That's my target for 280. So I'm long gas. Gold has been looking to have a nice fluctuation to the upside. It's kind of pulling back right now. So let's see if it continues to that pullback. Also, silver was nicely trending higher, but it's pulling back right now. And the currencies, copper is also pulling back as we speak. The currencies are trending lower, so kind of a reason for the dollar index perhaps that is continuing to push higher, and also the pound is trending lower. And we're gonna continue to see that trending lower, and the currencies, the metals indices, if we happen to get a breakout on the dollar index, and that could probably happen. You don't know. We are in an uptrend in the dollar index, so let's see if we do a breakout. If it does a breakout, then we'll definitely see a pullback on the currencies, metals, and indices. Perhaps using also crude oil. That's it for me today. Have a fantastic weekend, and I'll see you on Monday. Bye now.